Check, please.
Welcome back to Everything Money. In this video, you will learn about Visa, the payment processing company, and its stock. We'll show you the financials of Visa and what we think you should be paying for the stock moving forward using our amazing software and stock analyzer tool. If you want to trade Visa and you're into charts and trends, you can join Mo and he'll show you everything you need to know about trading this and other companies. I bring your questions about Visa and their global dominance to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they will provide you and I with a mindset on moving forward and whether we should buy or avoid Visa. I bring in Paul and Mo.
Thank you, Seth. Guys, don't forget to follow us on Instagram, our new Everything Money Investing Instagram account, and also follow us personally because we're doing some exciting things like matching pajamas. So, yes. Guys, let's go to our Everything Money software. We're going to the 8 pillars tab right here that I have. We're going to look up Visa. Click on it. So I have 2 Visas in my wallet. What do you guys have?
I have all Visas too, yeah.
I mean, it's literally the most incredible. Visa, yeah. Look at this. In fiscal 2020, it processed almost 9 trillion in purchase transactions. 9 trillion. The U.S. economy is 22 trillion, 23 trillion, whatever it is. That's almost half of the U.S. economy, 45% or 40% of it. That's insane. All right. So it's a $470 billion market cap, guys. Pillar number 1, we want a 5-year PE of under 22.5. It's 45.8. So that's double. Now, most times in a video, I'll say, but we don't know yet if that's too much or too little, because if a company is growing fast, it can justify a higher PE. I got to think Visa, being as large as it is, it's going to be very hard for them to grow at really high rates of return, at really high growth rates, but we'll see. Pillar number 2, we want a 5-year return on invested capital greater than 9%. It is 16.8. Now, for a company like Visa, though, guys, I wouldn't get too enamored with this because they're probably going to have a high return on invested capital forever, because what capital does it take within their business to keep growing? It doesn't take much capital. The debt and equity is not going to be much at all. So I wouldn't get too fixated on this number. Now, they do a small little dividend of 0.6%. and it pays out $2.8 billion a year. Now, guys, if you look above in our software, we make this easy for you by putting the 5-year average free cash flow and last year's free cash flow right here. So you can compare the dividends paid and make sure they can afford it. And guys, they can easily afford it. It's not even a fourth of it's not even 25% of their free cash flow in the last 5 years being paid out in dividends. So that's awesome. Pillar number 3, we want revenue growth. So we go to the income statement on our software. Revenue 5 years ago, 22 billion. Last year, 30.8. Now, last year was a big year, don't forget, because everybody got out of COVID and they started spending a lot, but it's almost tripled in the last 10 years. Look at that growth, Seth. Mo, do you see this?
Yeah, that's incredible.
11 billion to 30.8 billion dollars.
Paul, do you think this growth will slow down? They're saying that Visa and MasterCard are they're having trouble getting into some of these emerging markets. China is developing its own payment platforms with Alipay, WePay. PayPal is getting in there. I think PayPal entered the Chinese digital payment market. And so I'm wondering if Visa has even though they're incredible, if they have a tough road ahead.
I'm not going to say tough road, but look at the main page again of our software. Look at this gross margin of almost 80% and bottom line after tax margin of 51%. That's going to get a lot of people who can get in. The thing that Visa has, though, is their Visa. Their Visa. Like we have Dynasty Owner, right? Like Tim's listening to the call. Whenever I go on Dynasty Owner and say our sales, 90% of it's Visa. 80% of it's Visa. I don't know what number it is, but it's a huge number is Visa. Does that mean that they're going to be that way forever? No, but this is a company, I can already tell you right now, this is a company that I'm going to want to own when it's cheaper. So whatever's going to happen is going to happen. So pillar number 4, we want net income growth over the last 5 years. So we scroll down our income statement. 5 years ago, 6.7 billion. Last year, 12.3. So almost doubled. That's incredible. Pillar number 5, we want shares outstanding staying the same or going lower. So we go to the bottom of our income statement. 5 years ago, it was 2.27, and last year was 2.18. By the way, correction. 5 years ago, we have to go to the end of the previous year here because this is a snapshot and not for the entire year. So we really should compare it to the 2016 number, 2.38 to 2.18. So check mark there. Pillar number 6, guys, we want to look at the debt levels because, like you guys, the less debt a company has, the better. So what we've determined to be a good metric is we go back to our main page. We look at the 5-year average free cash flow, 11.42 billion. We multiply that by 5. And that equals $57 billion. We want their long-term liabilities under $57 billion. So we go to the balance sheet of our software, scroll all the way to the bottom, 29.57 billion. So almost half of what they need to be. So that's awesome. Their debt levels are very good. Our final 2 metrics have to do with cash flow. Remember, free cash flow is cash from operations less your capital expenditures. And the 5 things you can do with it is pay dividends, buy back shares, pay down debt, make acquisitions, and reinvest back in yourself. So we go to the cash flow statement of our software. We scroll here, and we have added the free cash flow line here to make the math easy for you. So 5 years ago was 8.61. Last year was 14.52. Check mark there. And our final metric is we take the 5-year average free cash flow. We multiply that by 20. So 11.4 times 20 is $228 billion. We want the market cap under 228. It's over 400 billion, so that's an X.
Yeah,
Let's go to our
470.
8 pillars tab. Look at this, 8 pillars tab right here. What do we see, Mo? What do we see, Seth?
Overvaluation.
That's where we stand right here. This is a great company. It's got all the metrics we like except for the valuation. So let's go to our very popular stock analyzer tool and figure out if it really is overpriced. Because remember, every investment is a present value of all future cash flows. So you have to, and we don't know what the future is going to be. So we have to make assumptions. And the assumptions will tell us if we're overpaying or underpaying today. So does anybody doubt that Visa won't be around for 10 years? Of course
not.
will.
Yeah.
All right, Mo, speak to me, brother. What's our growth rates for the next low, middle, and high?
How about 4, 5, 6?
4. Actually, it's more conservative than I would have done.
Oh, really?
I would have done 4, 6, and 8.
Okay.
I do see a world in which the world becomes bigger and bigger and bigger, and Visa benefits from all of that.
Yeah, so I could see that. And I can also see places like China saying we're going to use our own payment processing platform. That's why I kind of went a little bit more conservative.
And by the way, that's okay. On the low side, I think that's the reason to do the low side of 4%. I agree with you. But on the high side, if that's not going to be an issue, I think they can grow 8% a year for the next 10 years.
Okay.
All right. Profit margin.
43, 44, 45. I could even just put 45 across the board, I think. It's going to stay consistent.
Okay. I would actually say, listen, I want to make it with such a high number. Yeah. All right. Free cash flow margin. Oh my God, look at the free cash flow. It's going to be a lot higher.
Yeah, it's higher. 40. You want to do 45, 47, 51?
I like it. Okay. PE. Get the eye rolls from everybody.
14, 16, 18. It's huge.
Exactly what I was thinking. And then same thing with price of free cash flow. And guys, like usual, we do 12.5% for our return because you can invest in an ETF and get 9 or 10%. So you might as well give yourself some margin of safety to buy an individual stock. Hit the analyze button. Guys, the stock is currently at $216. Boom.
Yeah.
And it makes sense with such a high 5-year PE that this thing has got to drop a lot. This is just math, guys. So we're looking at this saying this is 62 to like low 60s, low 80s, and low 100s. So let's go up here and say, okay, let's say our assumptions are really conservative on the revenue side. Let's go 7, 9, 11%, which guys, I don't think you can do. But let's just say that. It's still overpriced.
Yeah.
We only got the high 70s, how about 100, and then 130 to 140. This stock is just overpriced. And that's the point that we use a stock analyzer tool for. Changing our assumptions. Most people don't calculate it and say, well, yeah, but your revenue growth on the low side was 4%. I would almost double it to 7. Great. Makes the stock an $80 stock instead of a $60 stock, whatever it was. So that's why we use a stock analyzer tool, is because it allows us to make these assumptions.
Are we just going to gloss over the fact that you just said cock instead of stock? And we're just going to just pretend that didn't happen, Paul, because it totally did.
Please tell me that didn't just happen.
I didn't hear it.
It was quick, but I like where your head's at. Listen, if you want the software behind Paul, if you want everything he can give you, he'll tell you how to get it right now. Go, my friend.
So guys, we made this software because we got so many requests from our subscribers saying, hey, how do I analyze my own stocks without having to wait for you guys? So we said, okay, let's just invest hundreds of thousands of dollars and do this. So we created our software. It includes everything you saw already. It's all in a mobile app. So it's already ready for your mobile phone, fully ready to go. You've got all the 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive daily content. 1 to 3 videos per day from Seth, Mo, and I, only for the subscribers of our software. Plus, you get everything here that's coming soon. This is all coming soon. Get it all here, available for you. But most importantly, the biggest thing you get is we have a community of over 6,000 people who use our software every single day. You can talk to them about all your investment ideas because a lot of our users felt alone thinking about investments a certain way. And that's why they gravitated to our channel. But now it allows them to go talk about any investment ideas, including crypto, with people in the community, bounce ideas off each other, make all the decisions you want. And this is all for only $1 per day. $1 per day gets you all of this. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it will lead to hundreds of thousands, if not actually millions of dollars in extra net worth for you for only $1 per day. So 2 ways to sign up: everythingmoney.com or Patreon. The benefit of everythingmoney.com is we aren't big enough yet to charge a sales tax, so you'll save on the sales tax for quite a while. So again, guys, $1 per day, sign up, everythingmoney.com.
And if you want to trade Visa at a quicker pace, Mo will show us, the leader of the Bid and Ask Nation, that upper trading tier. He'll show us how to trade this stock, Paul. Let's go for it, Mo. Show it to me.
So this is the long-term chart, and I just noticed something. I just looked at the chart for the first time right now. If we just draw a couple of lines like here and here, and this is dating back, whoops, that was pretty bad, dating back to pre-COVID. With the exception of COVID and this little pop that we had over here, you've really just consolidated between 180 and say 220 up and down for a long period of time. So this to me is a good stock to trade long term, because you can get a little run like this that'll last you a couple of months, and you can come down and that'll last you a month. You can get a run up that'll last you a couple of months. These are ideal stocks for long-term trading because you can actually catch a long-term trend. So if you are struggling to find stocks to put in your long-term watch list, throw Visa on there, and that's what you can do because that is looking very good. Now, this is a common theme that we're seeing. Volume is decelerating across the whole market. So again, this is just doing exactly what Facebook was doing. It's going right into its 100-day moving average. So the fact that it's going into its 100-day on a short-term chart with this rollover beginning, I do think that you're going to bounce off the 100 and start to come back down. So this is a great time to learn how to short. You can make a couple dollars on the downside. Now, I wonder if this is a good stock for day trading because they're huge. I imagine that they don't move very much. It's interesting though. So this is a 15-minute chart. This is taking one candle and opening it up and showing you every one of these candles is now 15 minutes. So what you're looking for is your long-term stochastic to be over 80. That's your sweet spot when you're day trading. And you are looking for good consistent volume like we saw last week. And then you see these engulfing candlesticks. And actually Visa turns out that it is a pretty good stock to day trade. It's had multiple days in a row where you can go long and day trade this thing. So maybe Visa is a stock that you really want to pay attention to from all 3 different perspectives. I never would have guessed that this boring old processing company would be a good stock to trade, but I really love it from a long-term perspective, and I kind of like it from a day trading too. So if you want to learn these rules, come and join me in the Bid and Ask Nation. You'll get access to my Trading 101 series, which gives you all of these rules that you need to be successful from any trading perspective that you want. And if you're a new trader, come and join me. You don't have any bad habits in place. You're ready to go, and you'll do very well. You get my Employed Trader series, which is 6 stocks that I go through every single day and update you on and kind of do the legwork for you. You get my exclusive monthly Saturday seminars, 1 Saturday a month. It's open Q&A to the Bid and Ask Nation, and I do some teaching. And you get the chat community of 950 plus people that all have the same goals as you. Come and join me in the Bid and Ask Nation.
We will keep you updated on Visa, an interesting stock to trade and potentially buy, an industry staple, Paul, for sure. And we'll see where it goes. That's our take. Get the software. You will love it, and you will love the community. Talk to you soon. See you next video.